Is Toronto's real estate market finally a buyer's market? After years of skyrocketing prices and fierce competition, could this be the perfect time for buyers to make their move? Let's dive into the latest trends and find out if it's time to grab that dream home at a better price. If you're new here, my name is Harkirat Singh, broker with Harmony Real Estate Group. I help buyers and sellers move smoothly and seamlessly across the GTA. Each month, I break down the latest stats and market report about Toronto real estate and the GTA. The purpose behind these videos is to provide educational and insightful content so that you as a consumer can make better informed decisions when navigating the Toronto real estate market. If you get any value out of this type of content, make sure to like and hit the subscribe button. If you have any questions or would like to work with our team, you can book a call by clicking on the first link in the description below. So the Toronto Regional Real Estate Board released their Market Watch report a couple of weeks ago for February. Some of the key points are home sales in the Greater Toronto Area were down 27.4% compared to February 2024. New listings increased by 5.4% year over year, indicating a high level of available inventory. Active listings increased by 76%, which is a large number compared to February of 2024. Average home prices decreased by 2.2% to $1,084,547 compared to February 2024. Average listing days on market increased by 12% from 25 days to 28 days, and average property days on market increased 16.2% from 37 days to 43 days. Moving on to the sales and average price by major home type, we can see that home prices are down across the board except for Toronto detached and townhomes. The biggest losses can be seen in the 905 or the Greater Toronto Area across all types, down 3 to 5.3% year over year. Looking at this graph here with data provided by the Habitat, we can see that 2025 has had the slowest start to the year for sales in a while when looking back 10 years. Sales are down nearly 60% from the peak of January 2021. And on the other hand, January has also started the year with the most active listings in Toronto by a large margin. The only year that surpasses this January is January of 2015. Before we dive deeper and break things down by freehold versus condo and different regions in the GTA, I wanted to bring up this recent report by RBC Economics that's focused on Canadian housing and what it has to say about the Toronto market. Along with economic uncertainty, and if you haven't already heard, tariffs, Toronto's real estate market in February 2025 experienced a significant downturn, with home resales plunging by 29% on a seasonally adjusted basis compared to January, the sharpest monthly decline since the early days of the pandemic. As a result, Toronto's composite MLS home price index fell by 1.5% from January, and it was down 1.8% year over year. Condo prices were particularly impacted due to a surge in new completions and investor hesitation, further intensifying downward pressure on the market. Now we'll dive deeper into the freehold and condo market in Toronto and how this year compared to past trends. We'll also look at municipalities across the GTA. Let's start with the sales of detached homes in the month of February. The first thing that stands out is that detached home sales in the GTA are their lowest level on record for the month of February going back to the year 2000. We only saw 1,706 sales, down 32% over last year, which indicates a very slow market for detached homes. The reason being is a lot of upsizers are on the fence about making a move with the current economic conditions and uncertainty, along with the risk of job losses. Looking at the volume of new listings, they're up just a slight bit compared to last year and seem on par with a regular healthy market. But active listings is almost 1.5 times compared to what was available in the market last year. So if we take a look at this chart, the number of detached homes available for sale across the GTA is 1.5 times, nearly double what was available last year. We are just over 7,000 listings compared to shy of 5,000 listings last year. Compared to historical trends, it's in line with years like 2010 to 2013, but since demand was off the chart in the last couple of years, listings are well available in the market for detached homes. This is driving up months of inventory, so we're currently at about 4 months of inventory, which is indicative of a buyer's market. We've been slowly working our way towards a buyer's market since April of 2024 in terms of months of inventory. There was a little dip in November, which makes sense due to seasonality. Lastly comes the median price for detached homes across the GTA, which have been pretty flat. We've also seen some seasonal changes in the spring markets of 2023 and 2024, but prices are actually flat for low-rise homes. It's a very common slow market. It's essential to be mindful of this market since some markets are competitive and getting multiple offers while others are slower. Now moving on to the condo market, sales are down 23% over last year, very close to sales levels seen during the global financial crisis back in 2008-2009. Those were a little bit lower. Otherwise, sales are at all-time lows for condos across the GTA. New listings, on the other hand, are at all-time highs for the month of February, looking as far back as 2010, up 8% from last year. Active listings, on the other hand, are at unprecedented numbers. We haven't seen these many condos up for sale in quite some time. They're up 48% compared to listings last year. Out of the 7,400 condos up for sale, 31% are owner-occupied, 20% are tenanted, and surprisingly, 49% are sitting vacant. This is due to a variety of factors, with condo owners just exiting the market, some of them being mom and pop investors that no longer see the yield in condos with monthly negative cash flows. Sales are a lot lower and inventory is gradually building up, which leads us to our next point, which is months of inventory. So looking at the months of inventory, we're at about 5.5 months of inventory, which puts us well into a buyer's market. Prices are still very flat and up 12% from the COVID lows in 2020. Only 454 condos sold in the month of February across the GTA, out of which 80% sold under the listing price. Many people are choosing to rent their condos if they can't get the price they're looking for, even though the rental market is fluctuating. And rents are coming down across Toronto and the GTA. If things get worse, we may see prices drop further, but prices are relatively stable for now. So looking at the home sales trend for the last 25 years, you can see the average monthly sales as the black line, the median monthly sales as the orange line, and the 2025 sales as the light blue line. You can see average and median sales converging throughout the months. Typically, sales are at all-time highs in May during the year, and then there's a slight increase in October before things slow down for the winter. We are off to a very flat start this year, with sales hovering around the 4,000 mark for both January and February, with a slight pickup in volume in February. On the other hand, new listings seem in line with seasonal trends. We started slightly higher in January at about 12,500 listings, which is about 25% higher than the expected new listings for January. Now, this is the trend line we really want to look at. So active listings across the GTA are sitting close to 20,000 listings, 25% higher than the seasonal trend. Active listings are typically sitting at about 12,500 listings in January and 15,000 listings in February, whereas there were 17,000 active listings in January and there are currently 20,000 active listings across the GTA. Looking at this bar chart of active inventory levels in the GTA going back to the year 2000, we can see active inventory has reached all-time highs that haven't been seen since the global financial crisis in 2008-2009. This is a 76% jump in inventory levels since last year. There's a lot more assignment deals that are contributing to active inventory levels along with condos. There are currently 8,571 condo apartments up for sale out of the 20,000 listings available on the market, which makes up about 43% of total inventory available currently. The next trend we want to look at is home sales as a percentage of new listings. The lower this number goes, the closer we are to a buyer's market. The higher this number goes, the closer we are to a seller's market. A balanced market is anywhere from 40 to 60%. Looking at the trend line, we can say that typically at this time of the year, we are in a balanced market, but based on the stats for 2025, we are well into a buyer's market based on home sales as a percentage of new listings. When comparing number of active listings across the GTA from last February to this February, we can see that the number is up 47%, and when looking at sales volume compared to last year, sales are down almost 30%, which are some pretty large numbers. Now we're going to break down some stats based on region and municipality. We'll be looking at the change of active listings and home sales year over year and whether they have been increasing or decreasing. Looking at the change in active listings year over year by percentage in the 5 different municipalities across the GTA, we can see that Toronto had the lowest change in active listings year over year, sitting at 40%, followed by Durham and York at 49%. Halton at 52%, and lastly Peel having the largest change in active listings year over year at 63%. Now looking at the change in home sales year over year by percentage, we can see that Halton had the largest slowdown with sales dropping 48% year over year, followed by Peel at 35%, York at 29%, Durham at 23%, and lastly Toronto at 22%. Toronto has had a relatively well-performing market compared to other segments in the GTA. If we look at individual cities across the GTA and some parts of Ontario in terms of change in active listings year over year by percentage, Brampton takes the lead here with an almost 85% increase in listings year over year, followed by Markham, Oshawa, Milton, and Richmond Hill, which are all sitting in the 60 to 70% increase. Then we have cities like Burlington, Whitby, London, Aurora, Stouffville, which are all sitting in the 40 to 50% increase in active listing. And lastly, we have cities like King, Halton Hills, Niagara, East Gwillimbury, and Guelph that had the lowest increase in active listings year over year. Lastly, if we look at the difference in home sales year over year across cities in the GTA and Ontario, we can see that Erin is the only city that has had more homes sold in February of 2025 compared to last February. East Gwillimbury and Windsor reported the same amount of home sales, followed by Ajax, Toronto Central, Waterloo, Hamilton, and Newmarket reporting 20% less homes sold compared to last February. Then we can see cities like Mississauga, King, Richmond Hill, Orangeville, and Niagara sitting in the 30 to 40% range, and the largest decreases in home sales can be seen in Milton, Halton, and Aurora, which saw decreases more than 50%. All the stats reported can be found on TRREB's Market Watch or the Habistat. So just to recap, based on all the graphs and data we saw, we can see that the Toronto real estate market is showing clear signs of a buyer's market, with sales down 27.4% year over year and active listings surging by 76%. Detached home sales hit record lows for February, while condo sales are near levels seen during the 2008 financial crisis, with nearly half of listed condos sitting vacant. Months of inventory have climbed to 4 for freehold and 5.5 for condos, indicating increased buyer leverage. Prices remain relatively stable, but high inventory and economic uncertainty may lead to further declines. Regional data shows Peel and Halton experiencing the largest inventory surges, while Toronto's market remains more resilient. Overall, the GTA is seeing a significant market slowdown, presenting opportunities for buyers. The only thing that can make things worse is tariffs. Tariffs could significantly impact Toronto's real estate market by driving up construction costs, slowing new developments, and increasing home prices over time. Higher costs for materials like steel and lumber may reduce housing supply, while investor uncertainty could lead to more properties hitting the market. Additionally, increased renovation expenses could slow resale activity. If tariffs contribute to broader economic instability, job losses, or reduced consumer confidence, demand for housing may decline further, reinforcing the shift towards a buyer's market. If you found this video useful, make sure to like and hit the subscribe button. I plan on breaking down these stats monthly if this type of content interests you and you would like to know more about what is going on with Toronto and GTA real estate. If you have any questions about the market, feel free to book a call with me by clicking on the first link in the description below. Thank you for watching, and I'll see you on the next one.